OpenAI just filed for what will become the most watched IPO since Saudi Aramco, a $1 trillion listing on $25 billion of annualized revenue. That's a 40 times sales multiple, 3 times what every other public AI company trades at. When this SAO-1 lands, it resets how Wall Street prices the entire AI cohort. This is Sunday Brief Number 1. Today's mission: walk through the math, the 3 numbers that decide whether the trillion holds, and the 5 stocks that reprice when the bell rings on Tuesday. Let's get into it. Start with the trajectory. In October of 2024, OpenAI raised at $157 billion. By February of last year, $300 billion. May, $500 billion. The most recent private round in March of this year, $852 billion. And now, less than 3 months later, the IPO target is $1 trillion, a 16% step in 1 quarter, with no new private round to justify it. The valuation is being pulled by the IPO process itself. Now, anchor that against revenue. OpenAI is at roughly $25 billion in annualized run rate, up from $4 billion in 2024, a 6-fold jump in 18 months. Divide $1 trillion by $25 billion and you get 40 times sales. For context, NVIDIA trades at 23 times sales after the most ferocious AI tape in history. Google sits at 7, Microsoft at 13. 40 times sales has never been priced into a tech IPO of this size. Not Saudi Aramco at 1.5 times, not Alibaba at 24, not Meta at 20. The bear case starts there. At 40 times, every quarter of revenue growth has to land. The bull case is that compounding $25 billion at 100% growth gets you to $50 billion next year, and the multiple compresses to 20. Neither case is obvious, which is precisely why the S1 matters. When the S1 drops, ignore the marketing prose. 3 numbers tell you whether the trillion holds. First, compute cost as a percentage of revenue. If it's above 70%, the path to profitability is long, and the bear thesis tightens. Anthropic, which guided to $10.9 billion in second quarter revenue and a first-ever operating profit, is doing this at roughly 60% gross margins. OpenAI has to show its number is moving in the same direction. Second, Microsoft's exact equity stake in the filing. Reports peg it near 49%. That would mean nearly $500 billion of paper value on Microsoft's balance sheet at the trillion mark. The precise percentage changes how Microsoft shareholders book the gain and how the float looks at IPO. Third, the operating margin trajectory, not the headline loss, the gradient. If the S1 shows narrowing losses on widening revenue, the IPO holds at $1 trillion. If it shows widening losses on the same growth, the underwriters get pushed to price closer to $800 billion. The bear hits hardest if compute is above 70% and operating margin is flat. That's the combination that kills the multiple. Watch those 3 lines first. Everything else in the filing is downstream. OpenAI doesn't print in a vacuum. 5 other names move with this filing. NVIDIA. Roughly a third of OpenAI's reported compute spend flows to NVIDIA Silicon, directly or through hyperscaler resellers. If the S1 confirms multi-year compute commitments, NVIDIA's bear case durability debate quiets, and the stock holds its $5 trillion cap. If those commitments look flexible, open to AMD or custom silicon, NVIDIA reprices down. Microsoft. 49% of $1 trillion is $490 billion of paper value, instantly the largest single-asset gain in corporate history. The market has not fully priced this. Expect Microsoft to outperform into the S1 drop. Google. Forced response. If OpenAI prints at $1 trillion and Anthropic follows at $900 billion, Google's 7 times sales multiple looks cheap, and the catch-up trade starts. Watch for Gemini commercialization announcements within 30 days of the S1. Anthropic, instant comp. $1 trillion OpenAI sets the floor for Anthropic's current round, which closes by end of May at $900 billion. The next Anthropic round prices off this filing. AMD, hedge play. If OpenAI's S1 shows compute concentrated in one supplier, AMD becomes the obvious second source, and the stock gets a re-rating. The cleanest trade isn't OpenAI itself. It's the 4 public names whose multiples haven't yet absorbed what a $1 trillion OpenAI does to the comp table. Memorial Day. Monday is closed. Tuesday is the first reaction window, and after a long weekend, U.S. traders position aggressively into the open. 3 things to watch overnight Monday from Asia and Europe. 1. Options implied volatility on Microsoft, NVIDIA, and Google. If implied vol jumps Monday in London hours, it tells you institutions are positioning before Tuesday's bell. 2. Any new leaks from Reuters, Bloomberg, or the Wall Street Journal about the S1 itself. The filing window is open. Anything could drop Sunday night New York time, which is Monday morning Asia. 3. Secondary market activity in OpenAI shares, which trade thinly on Forge Global. A bid above $850 billion on Monday is a leading indicator. Now, the trade itself. The highest conviction direction is long Microsoft into the S1, because the 49% stake is the most mispriced piece of this story. Second pick, long Google, because Gemini commercialization gets pulled forward by the comp pressure. Third pick, stay on the sidelines on NVIDIA. The bar is too high until we see the compute spend line. Bear hedge, long Oracle. If hyperscalers commit publicly to OpenAI infrastructure, Oracle's $300 billion OCI book gets re-rated. Tuesday opens with all 4 names back to last Friday's, close adjusted for index futures. That's where you take your shot. Zoom out. OpenAI is not the only mega listing in flight. Anthropic at $900 billion closes its current round in days and almost certainly files within 12 months. SpaceX, with a private cap near $350 billion, has signaled IPO intent. By summer 2027, the market could absorb $3 trillion of fresh AI and frontier tech equity. That's a number with consequences. Index reweighting alone forces passive funds to rotate. $3 trillion of new supply pulls liquidity from existing public names. Yes, even the big ones. Watch for relative weakness in Meta and Apple in the weeks leading up to each filing, as fund managers raise cash. And there's a glut risk. 3 mega IPOs in 12 months has happened before. 1999, 2000, 2021. Each time, the third one priced at a discount because the cohort had absorbed too much capital. So, order matters. OpenAI first sets the ceiling. Anthropic second confirms or disconfirms the AI premium. SpaceX third tests whether public markets still have appetite. If you're reading the tape right, the highest leverage positioning is into the first one, because by the second and third filings, the multiple compression is already on the chart. The S1 lands in the next 30 days. Watch the compute line. Watch the Microsoft stake. Watch the path to operating profit. When OpenAI prints, every AI multiple in the market gets reset. Starting today, every Sunday. The Daily Alpha will give you the deeper analysis that doesn't fit a weekday window. If this helped, subscribe, and we'll see you at Tuesday's Open.